Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Dr. Anish Mohammed, co-founder and CTO of Panther Protocol, which enables regulatory transparency and trading confidentiality for the crypto community. Dr. Mohammed, it's great to have you with us. Welcome to Trade Talks.
Thank you very much.
Tell us about the current challenges with cryptocurrency and privacy and security.
Sure. It's sort of a trilemma. In general, in the world of security, you have KYC and anti-money laundering. And there is an amount of privacy that's assumed in the traditional world. The crypto world, generally speaking, transparency is the standard. Essentially, what that means is any transaction that actually happens in the blockchain is visible to everybody, anybody and everybody. So every transaction that you ever have will be clearly visible to everybody. So if you have a strategy that you want to deploy and you want to actually protect that from everybody else, at this moment in time, it's incredibly hard. There are some privacy preserving protocols, but that's end-to-end privacy. What that means is if you do something, you will struggle to prove to a regulatory authority when you submit your tax returns that you are the person who did the transaction.
So how do you protect cryptocurrency from multiple forms of system hacking through enhanced applications of zero-knowledge proof? Tell us about that.
So, preventing hacking from on an endpoint device is much more harder. From a protocol perspective, we could definitely do a lot more to enhance security. So if you were to think about, deploying a piece of software, if you are using zero-knowledge proofs, you can actually assure that the software hasn't been tampered with, even without knowing if, what the software actually implements. So that's one way to think about it. The other way to think about it is like you can actually combine zero-knowledge proof systems along with things like trusted platforms, it's like TPMs, trusted platform modules, to actually make sure whatever you deploy is cryptographically secure over the period of time that you're using it. If you combine these, then you would be able to make sure that the state of the software that you deploy stays the same over the period in time that you use it. If anything changes, then you have the ability to intervene.
So when it comes to KYC in traditional financial services, it's pretty standardized, it's regulated. When it comes to the cryptocurrency space, is there a way to standardize, let's say, zero-knowledge proof or some sort of KYC process so that it can mirror what financial services already has in place? It seems as if it can be very fragmented and there's no standardization. Is that part of the challenge?
Yeah, I would completely agree. A KYC process as it stands very much is fragmented. A lot of platforms are available to do KYC. They do the process, but the process is not as standardized as we have in banks. So in banks, again, banks have regulatory arbitrage. So the KYC process that happens in the UK will be slightly different from other parts of Europe, will be slightly different from the US. But a lot of it has gone through years and years of the standardization. We have standards for formats, there's standards for processes, and the financial regulatory authority in the UK will describe which are the kind of services that you can actually use. In crypto, we have not reached that level. We can't actually go to somebody and say, this is a standard you need to comply to. These are the sort of set of services that you can subscribe to and you'll be compliant. So that level of maturity hasn't been reached. Absolutely true that we have that as a challenge. Having a standard which is interoperable and takes care of the regulatory arbitrage would be very, very helpful for crypto.
So tell us more about Panther Protocol and where you fit in the ecosystem and the solutions that you're looking to provide.
So from a previous question, we've kind of come to the conclusion there are three pieces that's required for an institution to get into DeFi. One is the ability to actually develop and deploy strategies so they can have an alpha, right? And they want to prevent this alpha from being copied by everybody, which can easily happen in DeFi, so providing privacy. Number two is to actually have KYC, so KYC and AML. So Panther would allow you as an institution or a retail investor to actually use on a fire do other services to do KYC. And number three is by the end of the year, after you having done all the transactions, you want to submit your tax returns to IRS or HMRC in the UK. You have the cryptographic ability to prove to HMRC or IRS that these set of transactions were actually created by you, and hence they have the ability to prove that you you're only liable for this amount of money as taxes, and you're covered in all senses.
Okay. All right. Anish, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.